So, as we're wrapping up 2025, you've probably seen the headlines, right? Everything's looking fantastic. The market seems to be on an absolute tear, a picture of pure economic strength. But if you dig just a little deeper, there's a really strange, kind of paradoxical story playing out right under our noses. And that's what we're going to get into.
I mean, just take a look at this. The S&P 500, another all-time high right before the holidays. And get this, it's not a one-off. This is the 38th time this year we've hit a new record. You just can't argue with that, right? That is a full-blown roaring bull market.
And it's not just Wall Street either. The actual economy, it looks like it's absolutely firing on all cylinders. Q3 GDP growth was a massive 4.3%. I mean, that blew right past what anyone was expecting. You've got strong spending, a tough economy. It all seems perfect for that classic end-of-year rally. So, with all this great news, where's the problem? What's the paradox I mentioned?
Well, here's the thing. Those big, flashy numbers, they're kind of hiding what's really going on. It's like they're masking this huge divide. Once you peel back that top layer, you realize the economy is telling two completely different stories at the exact same time.
Okay, so that brings us to our first big contradiction, what I'm calling the great consumer divide. You have to ask, if things are so great, why doesn't it feel that way for everyone? Let's dig into who's actually winning.
And this is where it gets really wild. I mean, look at this split. On one side, you've got Walmart just crushing it. Ad revenue is up a crazy 53%. Online sales are through the roof. They're so powerful they're breaking into places like New York City. But then you look at everyone else, and wow, it is a total bloodbath. You've got chains like REI, Claire's, and JCPenney all announcing store closures. Even Nike is disappointing investors, and Walgreens, they're cutting employee benefits. This doesn't look like a healthy retail environment at all. It looks like one giant is winning, and pretty much everyone else is losing.
Yeah, Jim Cramer really hit the nail on the head here. He just came out and said it. Retail, outside of Walmart, is disastrous. And, he's not just being dramatic. That's a pretty sharp diagnosis of a much deeper problem that's been brewing for a while now.
And that problem, it has a name. It's what economists call a K-shaped economy. And this is really the core of what we're talking about. Think about the letter K. You've got one arm going up and one arm going down. The top arm? That's high-income households, huge corporations, they're doing great. But the bottom arm, that's your middle and low-income families, your small businesses. They're struggling or even falling behind. So Walmart's incredible success, it's not just about them being good at what they do. It's a massive signal that a huge chunk of the population is so squeezed they have to choose the lowest price, no matter what.
All right, so this split personality isn't just happening in the shopping malls. It's happening in the markets too, and it might be even weirder. Let's talk about confidence and fear, and why they're both going up at once.
So this leads to a really obvious question, right? If everyone's so confident, if they're pushing stocks to these insane highs, then why on earth are they also buying up record amounts of what is essentially financial insurance? Okay, so on the one hand, you've got the VEX. You probably know it as the fear gauge. And right now, it is practically asleep. A level this low basically means investors aren't worried about a thing. It's a sign of, well, total complacency. Everyone just assumes the party's going to keep going. But then, look at this. At the exact same time, the price of gold, the ultimate I'm scared asset, is also hitting a new all-time high. And let me tell you, people do not rush to buy gold when they think everything is perfectly fine and safe. Look, having stocks and gold both surge like this at the same time, that is not normal. It's really unusual. And what it suggests is that same K-shape we saw with consumers is now happening with investors. You've got one crowd going all in on risk, betting on more growth. But then there's this other, maybe quieter, group that's buying up gold because they're getting ready for a storm.
So what are they so worried about? What's this storm on the horizon? Let's look ahead to 2026. Because right now, the market is basically priced for perfection. There is zero room for anything to go wrong.
And these are the big ones. The things that super low VIX seems to be totally ignoring. First, we've got a big change coming at the Fed. Jerome Powell's term is up. A new chair could mean a whole new game plan. Second, like I said, valuations are sky high. If even one thing disappoints, we could see a nasty correction. Then there's the consumer. Can they keep this up, especially with credit card debt piling up? And finally, there are geopolitical risks, like tariffs. The Fed itself has said these could hurt jobs, but the market? It seems to be pretending that risk just doesn't exist.
So, let's wrap this all up. What do we make of this completely two-faced market? Is it strong or is it just fragile? Are we seeing quiet confidence or dangerous complacency?
So, to recap, what we've seen today are these massive contradictions. You've got record highs on Wall Street, but a consumer base that's really struggling. You've got risk-on things like stocks and risk-off things like gold, both flying high. And you have a fear gauge that's basically silent, even though there's some really obvious, really big risks sitting right there on the horizon.
So yeah, the headlines are all festive and cheerful, but the data underneath, it's telling a much quieter, way more complicated story. And I think that leaves us with the one big question every investor has to be asking themselves as we head into the new year. Is this market silence a sign of real, lasting strength? Or is it just the quiet before the music stops?